not to mention financial loss, on my journey learning how to trade. And so the series that I put together will be exactly what I wish had been available for me. Okay, let's get started. What exactly is support and resistance? The simplest way to think about support and resistance is that they are areas where the market changed direction or has stalled repeatedly. A bullish move, so the market rising, which turns bearish, has met resistance. The opposite, so a bearish move, which turns bullish, has met support. Support and resistance areas can last for minutes, hours, days, weeks, and even years. As you study charts and learn markets, you will come to realize that markets have very long memories. However, this does not mean that support and resistance areas are never broken. In fact, they are broken regularly. When broken by a bullish move, resistance often becomes support for the market in the future. The same can be said for a bearish move. So when support is broken, it often becomes resistance for the market in the future. A last point on support and resistance is that it works on all time frames, be that 1 minute, 5 minute, 1 hour, 4 hour, daily, or weekly. It works over all time frames. It really is that simple. A lot of trading is very simple in a practical sense. Most traders fail, and estimates are as high as 90% of retail traders because of the psychological aspect of trading. I intend to touch a lot more on this in future videos. For now though, let's stick to support and resistance. Markets move in relation to the strength of the bulls and the bears. So when the bulls are in control, the market pushes higher. When the bears are in control, the market falls. There is always a battle going on between the bulls and the bears, and this is what moves the market. This is why you see markets moving like this. On this example you can see here, as the bulls push higher and the market turns, the market has met resistance. As the bears cause the market to fall, but then lose control to the bulls, the market has met support. When the market is moving sideways like this, the market is in a range. This is the most common way for the market to move. But do bear in mind that it will rarely look as neat as this, or be quite as easy to identify when you're on live charts. Another thing to note is that when the market does break resistance, it often becomes support. This market is now making higher highs and higher lows. A market moving like this, making higher highs and higher lows, is said to be in an uptrend. Moving in the opposite direction, when the market breaks support, it often becomes resistance. This market is now making lower highs and lower lows. A market moving like this, making lower highs and lower lows, is said to be in a downtrend. That is the basics of support and resistance. Now, let's jump over to some Forex charts and I'll show you it in action over different time frames and charts. Okay, so we're on the Euro US dollar Forex pair. I've got this set to the daily time frame.